On July 1st of this year, while most Canadians were watching fireworks, the federal government quietly put three separate amounts of money on the table for seniors. Real money. With your name on it, one of those payments landed in bank accounts automatically, and not a single person had to lift a finger to receive it. One of them just got a 25% raise that most seniors have never heard a word about. And the third one, which has the highest total dollar value of all three, has an income cutoff that is so much higher than people assume that the majority of seniors who believe they do not qualify actually do. Now here is where it gets complicated, and I want you to pay attention to this because it matters. Two of those three payments share a single master key, one condition. And if you did not meet that condition before I'm going to break down all three payments, tell you exactly what each one is worth in real dollar amounts, explain the master key, and give you every phone number, website, and form you need before the end of this video. But before we go any further, I want to plant something in your mind right now that I'm going to come back to at the end of this video. While I was building this script, I found a fourth element buried inside the July payment system. Something the government does every single July that can silently reduce the monthly income of seniors who are receiving GIS, the Guaranteed Income Supplement, and it does it without any warning, without any letter, and without any explanation unless you already know where to look and what to ask. If you are currently, what I spent years doing was working inside the Canadian Retirement and Benefits system, learning how the rules actually work from the inside, and it collects instantly the same pattern repeated. The government publishes the rules. The money is real. The eligibility criteria are right there on canada.ca for anyone to read, but the system is completely passive. It does not reach out to you. It does not send you a checklist, and it collects aggressively while it pays out silently. That gap is what this channel exists to close, so let us get into it. Payment 1. And this is the easy one, the automatic one, the one that already hit your account on July 1st with zero action required from you. Old age security went up. Every year, 4 times a year, in January, April. This quarterly adjustment has been happening since the 1970s, and most seniors who receive OAS have never really paid attention to it because the increases are usually modest. But they compound. Every quarter you have been on OAS, your payment has been slightly higher than the quarter before. Over 10 years, that adds up to a meaningful difference from what you started with. For the July to September 2026 quarter, the new maximum old age security payment for seniors between the ages of 65 and 74 is $751.97 per month. For seniors who are 75 and older, the maximum is $827.17 per month. The 75-plus amount is but where quarterly adjuratress has spent significant time outside the country, your OAS is calculated proportionally based on your years of Canadian residency, but regardless of what your personal OAS amount is, your July payment should be higher than your June payment. That is the point. Here is the action step I want you to take right now if you're able to. Go pull up your bank account, either on your phone, your computer, or your paper statement if that is what you have. Find your June OAS deposit and find your July OAS deposit. Compare the two numbers. If July is higher than June, the adjustment landed correctly. If the amounts are exactly the same, that is your signal. Something did not process, and the right move is to call Service Canada at 1-800-20. And that connection is going to matter when we get there. The OAS clawback threshold. This is the net income level above which the federal government begins recovering your OAS at a rate of 15 cents for every dollar of income above the line. For the 2026 income year, that threshold is $95,323. That number went up this year, which is actually good news for a specific group of seniors. If your total net income from all sources, CPP, OAS itself, RRSP withdrawals, investment income, rental income, employment, all of it added together is below $95,323, you keep every dollar of your OAS. The clawback only starts above that line, $95,323. A few ever received a quarterly payment for some kind of automatic credit? A few $100 arriving in your account 4 times a year? Almost easy to miss? Most Canadian seniors over 65 have been receiving the GST and HST credit for years. It is a tax-free quarterly payment the federal government sends to lower and middle-income Canadians to help offset the goods and services tax they pay on everyday purchases. It is calculated automatically based on your annual tax return. It arrives in January, April, July, and October. And for most of the people receiving it in the background for so long that it barely registers anymore. For the 2025 benefit year, the maximum amount a single senior could receive through this credit was $519 per year. It is still completely tax-free. It is still completely tax-return, but the amounts increased by 25% across the board. A single senior can now receive up to $609 per year. A couple can receive up to $890 per year. There was also a one-time transitional top-up payment that was issued when the change took effect in July, which means some eligible seniors saw a larger than usual deposit this month before the regular quarterly amounts continue going forward. Let me put that increase into a number that actually means something. For a couple receiving the full benefit, the difference between the old GST credit and the new Groceries and Essentials benefit is $192 per year. That is one extra monthly payment arriving across 4 quarterly installments, completely. If your 2025 return on file fully processed with a notice of assessment issued in order to calculate your payment for this benefit cycle. If your 2025 return has not been filed, or if you filed it recently and it has not yet been assessed, the CRA has no basis to calculate your entitlement. What happens in that scenario is not a partial payment. The payment is suspended entirely. You receive nothing from this benefit until the return processes, and the missed quarterly payments are not automatically backdated. Now I want to talk specifically about who this affects, because it is a larger group than most people realize, and it is a group that often has the most to lose. There is a belief among a significant number of lower-income seniors that if they owe no income, the Alberta Trillium Benefit, if you live in Ontario Trillium Benefit, if you live in Ontario Trillium Benefit, the Alberta Seniors Benefit, the Alberta Seniors Benefit, the Saskatchewan Seniors Income Plan, provincial top-up programs in almost every province, all of these are triggered by your annual tax filing. Not by a separate application, not by a phone call, by the return. A single Ontario senior who stops filing, even with zero tax owing, can lose between $4,000 and $6,000 per year in benefit payments that simply stop coming, without a warning, because the system calculated nothing was owed and sent nothing. If you have not filed your 2025 tax return, here is what you do. You bring your documents, they file, you return, and the cascade of benefit payments that were suspended bit of time on this one, because it has the highest total dollar value and I see the most confusion about who qualifies. The Canadian Dental Care Plan. As of 2026, this program is fully open to all eligible seniors in Canada. The rollout phases are complete. There is no waitlist, there is no enrollment window you missed. If you meet the eligibility criteria right now, you can apply right now, today, this week. 3 criteria. First, you must be 65 or older. Second, your family net income must be under $90,000 per year. And third, you must not have access to private dental insurance through a work. And $90,000 is a significantly higher threshold than most seniors assume when they first hear about this program. Between sevens they make too much to qualify have never actually checked the number against their notice of assessment. The coverage works on a sliding scale. If your family net income is under $70,000, the Canadian Dental Care Plan covers 100% of eligible dental fees. Between $70,000 and $80,000, it covers 60%. Between $80,000 and $90,000, it covers 40%. What does 100% coverage actually mean in real life? It means a cleaning and checkup with x-rays, a filling if you need one, a tooth extraction, dentures, a range of other procedures listed in the government's published schedule of coverage for a couple, both of whom are eligible and both of whom use it. That is potentially $3,600 per year in dental services covered. To enroll, you go to Canada Dental Care Plan, or you call 1-833-537-263-537.2635. You will need your social insurance number, your most recent tax information, and a confirmation that you do not have private dental coverage. The application takes approximately 20 minutes online. Once you're approved, a card arrives in the mail. You present the card at a participating dental office. The dentist bills the plan directly. You do not pay up front and wait for reimbursement. One thing I want you to check before you book an appointment. Not every dental office has registered with the Margaret is simple because I think this is the moment where the actual scale of what is on the table becomes clear. Margaret is 71 years old. She lives in Ontario. Her total net income is $24,000 per year, which comes from a small CPP payment and her old age security. She files her taxes every year. She has no private dental insurance. OAS increase, Margaret receives approximately $640 per month in old age security. Her July payment went up by roughly $12 per month. That is $144 per year in additional automatic income, no action required. Canada Groceries and Essentials Benefit based on her net income of $24,000, Margaret qualifies for close to the full single-person benefit of $609 per year, paid in 4 quarterly installments of approximately $70,000. She lives in Ontario. Total new annual value for Margaret, $14,400 in additional OAS, $609 in Groceries and Essentials Benefit, and between $1,200 and $800 per year in dental services covered. That is between 2023 and 2023 in real value, flowing to her either as cash or as services that was either not available before or that she did not know she could access. Now let us run the couple version. Margaret's husband, Robert, is 73. Same household, same net income level. His OAS also went up automatically. They received the couple amount of $890 per year for the Groceries and Essentials Benefit. Robert also qualifies for the dental care plan, so they have two cards, two sets of. Every July, the government does in time supplement. You need to understand what happens in July. Every July, the government does two things at the same time. It increases old age security based on the quarterly CPI adjustment, which is the good news we started with. But simultaneously, in the same month, it also recalculates GIS eligibility and payment amounts for every recipient based on their prior year income. This recalculation is entirely automatic, entirely silent, and it takes effect starting with the July payment. What that means in plain English is this. The GIS you received in July is based on your 2025 income. If your income in 2025 was higher than your income in 2024, even by that is a 50 cents for every dollar of income tax rate. You receive above approximately $2,000 per year as a single senior rate, separate from and stacked on top of your income tax rate. So if you took an RRSP withdrawal of $2,000 in 2025, you will see your GIS reduced by $1,000. DDO 25 was also taxed as $40 in the benefit year that starts this July. A $5,000 DDO 500 annual reduction in GIS. A $10,000 reduction, and here is the part that makes this particularly painful. That RRSP withdrawal you took in 2025 was also taxed as ordinary income, so you paid income tax on it in 2025. And then pull out your 2025 tax return. Look at the total income you reported in 2024 and see if the difference explains the reduction. Second, call Service Canada at 1-800-27-T7-T1777-9914 and ask them to walk you through the recalculation. They are required to explain it to you, line by line, if you ask. Now here is the part most people have never been told, and this is the relief mechanism buried inside the same system that caused the reduction. If your income in 2025, you do not have to wait until next July for the GIS recalculation to catch up. You can ask Service Canada right now to base your current GIS payment on an estimate of your 2025 tax return. They will recalculate your GIS upward based on that estimate. When you file your 2026 tax return next spring, they reconcile the actual income. The transition is smooth. If your actual income was higher than your estimate, they will claw back the difference, so be conservative but honest in what you report. The number to call is the same, 1-800-277-9914. Ask specifically for the current year income option assessment. Not every frontline agent will volunteer this option to you. You may need to ask by name. Let me now bring everything together with your complete action checklist, because I do not want you to finish this video without a specific set of things to do. Action 1. Check your July bank deposit against June. Your OAS should be higher. The filing unlocks the Groceries and Essentials Benefit, your GIS recalculation at the correct income level, and a range of provincial top-up programs, depending on where you live. Action 3. Log into my CRA account at canada.ca or call the individual inquiries line at 1-800-959-82C81 and ask them to confirm your Canada Groceries and Essentials Benefit status. Make sure it is active and calculated on your 2025 return. If your return was filed but not yet assessed, ask for a timeline on when assessment is expected. Action 5. GIS criterias are older. If you are 65 or older, if your family net income is under $90,000, and if you have if your income in 2026 is genuinely lower than 25. Ask specifically about the current year income option. Has been assessed, not just filed. There is a difference. A return that has been received but not assessed means the CRA has it but has not processed it yet. Your benefit calculations are frozen at last year's numbers until the assessment is complete. You can check this in my CRA account online. A fully processed return shows a notice of assessment. If you do not have one yet, call 1-800-959-598281 and ask about the status. 6 actions, some of them take 5 minutes, some take an afternoon. All of them have real dollar values attached to them. But the system is passive on the government's side. The CRA earns nothing by calling your Groceries and Essentials Benefit. Service Canada has no mechanism to flag that your GIS dropped, and you might be eligible for the current year income option. The dental care plan sends no reminder to apply. Every payment I described in this video requires you to know it exists. Understand how the calculation works, take the specific steps to access it, and check your results to make sure it landed correctly. The people in this country who collect everything they are entitled to are not the ones with the most money or the most education. They are the ones who understand the system well enough to check, and who pick up the phone when something does not match what they expected. And if you want to understand exactly how CPP, OAS, and GIS interact with each other in ways that can create an effective tax rate above 70% on certain retirement income withdrawals, including the RSP trap that feeds directly into the GIS reduction I described today, I have covered that in full detail in the previous video on this channel. The link is on screen right now and it is in the description below. I am James Caldwell. Subscribe so you do not miss the next one.